Good morning all. Welcome to our YouTube channel MJ and PJ Commerce Classes. Today we are going to discuss the second chapter of Plus 2 Accountancy, that is Accounting for Partnership Firms Fundamentals. In this chapter we will discuss the following topics: meaning and definition of partnership, nature of partnership, partnership deed meaning and importance, provisions applicable in the absence of partnership deed, partners' capital accounts, division of profit amongst partners, profit and loss appropriation account, past adjustments, and guarantee of profit to a partner. Let us start the class. We know that there are different forms of business organization. You have already learned in plus 1 business studies different forms of business organization: sole proprietorship, partnership, joint Hindu family business, joint stock company, etc. Since there is only one person in a sole proprietorship, there are many limitations like limited capital, lack of ability and skill of sole proprietor, unlimited liability, etc. So, if the businessman desires to expand the size of the business, then definitely the formation of partnership is advised. Now we will see the definition of partnership. In India, all partnership agreements are governed by the Indian Partnership Act of 1932. According to Section 4 of the Partnership Act 1932, partnership is defined as follows. Partnership is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. This is a definition given by Indian Partnership Act 1932, Section 4. According to this definition, partnership is a relation between partners to share profit or loss, and the business can be carried on by all the partners together, or any one or two partners will carry on the business for all of them. Based on this definition, we will see the characteristics of partnership or features of partnership. First characteristic, two or more persons. For starting a partnership business, we need minimum 2 partners, and the maximum number is limited to 50 according to the company's rule 2014. And second feature is agreement. We know that partnership is a result of an agreement between 2 or more persons to do a business and share its profit and losses. And this agreement may be either oral or in written form. Third feature, existence of business. Partnership is formed for doing some legal business with an aim to make profit. So here two elements are very important. First element is business and second element is profit earning. If any one element is missing, then we cannot call it as a partnership business. So existence of business is a must for considering it as a partnership business, and making of profit must be the motive of that particular business. In the case of business itself, if it is a legal one, then only we can consider it as a partnership business. Fourth point, mutual agency. We have seen that the business of a partnership concern may be carried on by all the partners or any of them acting for all. Each partner, whether participating in management or not, will be held liable for the acts of other partners. So, every partner plays a double role as an agent as well as a principal at the same time. To clear this term, I will tell you one example. A and B are two partners. If A does an act, A is an agent and B is the principal. Similarly, if B does an act, B is the agent and A is the principal. So both agent and principal, they are mutually related. Next feature is sharing of profit. The agreement between the partners must be to share profit and losses of the business. If some persons join hands for the purpose of some charitable activity, then it will not be considered as a partnership. If two or more persons are starting a club or doing some social services, then we cannot tell it as a partnership business. So sharing of profit must be the main aim of partnership business. Then only we will call it as partnership. The next point, liability of partnership. In the case of partnership business, the liability of partners is considered as unlimited. That means the private assets or private property can also be used for paying off firm's debt at the time of winding up of the partnership business. If the assets and profit are not enough to meet the external liability, then in such a situation, the private assets of the partners have to sell off and meet all these external liabilities. So, liability of partnership is unlimited. These are the features of partnership. Hope it is clear. Next topic is rights of partners. What are the rights of partners in a partnership business? First one, right to participate in management. Each and every partner in a partnership business is having the right to participate in managerial activity. Second one, right to inspection. Each and every partner have the right to inspect the books of accounts. That means what all books of accounts are maintained in a partnership business, every partner can check or inspect the books of accounts at any time. Then third one, right to receive interest on loans. If any partner have given any loan amount to the partnership business, then that particular partner have the right to get a fixed rate of interest for the loan granted to the firm. Then next one, right to disallow admission. For admitting a new partner into partnership business, the consent or permission of each and every existing partner is required. Without the consent of the existing without the consent of the existing partners, any new partner cannot be admitted to a partnership business. The next one, right to receive proper compensation. Every partner has a right to receive adequate compensation for all the payments made by him on behalf of the firm or the expenses incurred on similar grounds. Next one, right to retire. Any partner can retire from partnership business, but there is only one condition, give proper notice in advance. So after informing every partner, any partner can retire from the partnership business. The next, right to share profits and losses. Each and every partner of the partnership firm have the right to share the profit or loss of that business. Now we will see the nature of partnership. We have seen that for starting a partnership business, two or more persons are required. The persons who enter into a partnership are individually known as partners and collectively they are known as firm. Hope it is clear. The persons who are starting the partnership business, individually we can call them as partners and all of them together is known as firm. And the name under which the business of a firm is carried on is called firm name. What is the name of that partnership business? It is known as firm name. A partnership firm does not possess any separate legal identity apart from its partners. In the case of joint stock company, we know that a joint stock company have the feature of separate legal identity. But in the case of partnership, that feature is not present. So, a partnership firm cannot enter into contracts for partnership with other firms, while individually or collectively its partners can. Partners can collectively start a new partnership business, but in the name of partnership firm, that partnership firm cannot enter into any agreement or contract. At the same time, two or more firms cannot form a partnership, while partners of such firms may unite in partnership agreement. So we can conclude that a partnership firm does not possess any separate legal identity apart from its partners. So today we have learned the meaning and definition of partnership, features of partnership, rights of partners, nature of partnership. Remaining topics we will discuss in next class. Based on today's topic, some questions are prepared in Google form and put in description box. So please try it. If you like this video, please subscribe, like and share. Thanks for watching.